That's right. My prediction is the market is going to fall just as fast as it's risen.
A couple of minutes earlier.
It's that time of the month again. Wait, I don't think I'm allowed to say that. The Fraser Valley Real Estate Board has just released their statistics for last month. So that means this video is the Surrey Report. And on this Surrey and Fraser Valley based real estate channel, we are going to show you what happened in the market since last month and last year. But stick around because it gets way more exciting, because after these stats, I'm going to show you even more stats. Well, kinda. I'm also going to give you a prediction. You see, I have a theory that the market is showing signs of kind of topping out, and after every single peak, well, there's a valley. And in this video, I'm going to predict how deep I think that valley might be. And in my personal theory and prediction, I'm going to suggest that the Surrey real estate market, or the Vancouver real estate market, goes up, and it can go up crazy, but it could also go up slowly. And when it goes down on the other side, it does exactly what the other side just did, but in reverse. That's right. I think the market is going to fall just as fast as it rose. And I'm going to tell you all about that. But first, here's my amazing team with the latest Surrey stats.
Moving into our detached market, we've seen 341 sales in the month of February. Our benchmark price is $1,773,100. That's up 5.9% month over month and 40.6% year over year.
And in townhomes, benchmark price is around $889,000. Now that's a 42.5% increase year over year and a 6.3% increase month over month.
We have a benchmark price for condos of $555,900. with a month-over-month increase of 6.5% and a year-over-year increase of 33.5%.
Crazy numbers. Like every single month we think these things just can't keep up, but those are crazy numbers, right? Now, before I rant about how quickly this market is going to decrease, if you would like to stay up to date on the Surrey and Fraser Valley marketplace, please subscribe to this channel. And if you would click the like button on this video and any other video you see on the channel, if you find any good information here, I would be forever grateful. And if you are looking to either get in or out of the market and you need a real estate agent on your side, you can book a call with me right now down below in the description with just a few simple clicks at a time that works best for you. And now on to the fact that I think the downturn in the market is going to look a whole lot like the upturn, if that's a word. That's right, my prediction is the market is going to fall just as fast as it's risen. But let me explain why, and the best way I can explain this to you is with math and charts. I love me some math and charts. So let's take a look here. This is the Fraser Valley Real Estate Board statistics. Sorry, you don't have access to this, but I will show you something soon that you do have access to. This is the city of Surrey, all product types. But let me show you exactly what it is. Well, first of all, we get a scale out. This is only at 3 years. I'm going to take this and put it out to our maximum of benchmark price, which started being calculated in 2005, just so you know. And then I'm going to kind of remove this or this kind of search criteria up top so you can get a better idea of what the market's actually done. So my theory is that when the market peaks, the run up before is going to almost be identical to the downward trend over the same period of time. And let me kind of explain. Now, there's a little bit of leeway here. This is, first of all, it's a prediction video, but it is also using historical trends to see where we end up. And let me kind of show you what I'm talking about. This little dip here is the 2008, let me get my cursor out of the way. This is the 2008 financial crisis. Right? So the financial crisis peaked out in real estate in Surrey. I believe it was June 2008 right there. The overall price for the whole market in the city of Surrey was $457,700. All right. So then the bottom of the market came the following March at $407,400. So this basically represents a 10% downturn. Remember, 2008 financial ruin represented a 10% downturn in the market. So you can try and say, oh, well, it was worse than that. No, it wasn't. These are the numbers. All right. So it took then, if we're going from June until March of the following year, it took, what is that? 10 months. It took basically 10 months to bottom out to the absolute bottom, and then the market started trucking along again. Well, what I like to do is from that peak, I like to go backwards and find out when it was previously at that low. And well, it was right around December 2006. There was actually, yeah, it's kind of right in that spot. It was a little flat there for a while. So December 2006. So now we're going back 1.5 years. This is the biggest gap, but it does kind of illustrate that, you know, if it's 10 months or if it's 18 months, it's not like the market goes up steady for 10 years and then drops off a cliff. Okay. And it's also not like the market usually goes up, and then just perfectly levels off. What I'm suggesting is that within a few months of each other, you're going to see the market correct in the same manner of which it just previously rose. But let's go on to the next time this happens. And that really was after 2016. 2016 was the introduction of the foreign buyers tax here in BC. The market peaked out in August of 2016. The tax was brought in. It was announced like in July and brought in for August 1st or 2nd. So that's how crazy it was. Everybody said, oh, well, it's only Chinese money that's coming in, mainland Chinese money. So this is going to kill the market. It's being artificially propped up. So the market then crashed. Now this crash was, I've got it written down here, I think almost just over 2.5%. And it bottomed out December of that year at 696,900. All right. So it went from 715 and it bottomed out just under 7, 2.5% drop. And that took exactly 6 months. So to find out when the market was previously at that level, we got to go backwards. And realistically, it was increasing so fast that that level was in June. All right. So we shot up for 2 months, and within 6 months on the other side of the peak, we see that valley. Now, again, these are not exact numbers. It's not going to be exactly 5 months on this side and exactly 5 months on that side. But from that peak, you're going to look at either side of that, and it's going to be very, very similar. All right. So let's keep that going forward. The next peak is here in 2018. That was the introduction of the stress test. I had someone on this channel comment and say that the stress test was brought in by Stephen Harper. And last I checked, the Liberal government Trudeau have been in since, 2015. And the stress test was brought in 2018. So whoever that commenter was, completely wrong. Not that I like to point out how wrong people are. So June 2018 was the peak of the market, and that was at 918. Let me find it here, 918,200. Then the market came down as a result of the stress test. And a lot of people think the market only goes up, but look at this, between 2018 and then recovering completely, I mean, you're looking at almost 2 years. You were well into the pandemic before you recovered from there. But, you know, that was your opportunity to buy in, but that's a side note. So let's go back to 918. The bottom of the market from there was January of the next year at 858,800. All right. So we topped out in June. We dropped all the way until January. That was now the new bottom. But let's find 858 when we go back previously. And if I'm not mistaken, it's right around, well, 860 is the January previous. So this is a perfect example. This is actually 6 months on one side, 6 months on the other side. And the market found its new bottom 6 months after the top. Are you understand what I'm getting at here? So there's 6 months on the front side, 6 months on the back side. Now, I'm not saying the run up is the same, but I'm saying if you cut the peak off of this mountain, the mountain doesn't look lopsided, right? The mountain looks straight up and down. So now let's keep going straight up and down, or maybe it's just a hill, I guess, right? But let's keep going. Now, this is insanity what we're seeing here. We're seeing record spikes in prices, and it's been going on. Last summer was actually quite slow, but it's been going on for quite some time now. So I'm going to assume that we're seeing the market. Now, I'm not going to predict when the peak is. That's not the purpose of this video. I'm going to tell you how I think it will come back when it comes back. So let's use a worst case scenario since I've been in the real estate industry of 2008, a 10% drop. So currently this peak in the city of Surrey is 1,339,400. So if we calculate a 10% drop, that number is just over 1.2. Well, if we go back to when it was just over 1.2, it was in December. These are now February's numbers. So I would suggest that if today is the peak, and yesterday I actually predicted, this is being recorded on the 3rd of March, I predicted that yesterday was the peak. My predictions are not always true, so don't rely on that. But it will only take, in my opinion, to turn back, if this is the peak, 2 months. Does that make sense? But I think anybody that bought a house for over 1.3, that turn back is likely going to be 10%. At worst case scenario, I don't know if, let's call it World War III breaks out, and we're going to find that new low or that dip within the same amount of time as we found the rise from that point. Is that clear? So it's not exact science. Don't think this is exact science at all, because it is not. What I'm telling you is the curves upwards and the curves downwards within a few months of each other tend to be very much the same. Now, I know exactly what everybody here is going to say that is older than me. They're going to say,
in 1982, house prices slashed in half.
Correct. But I've got an answer for that. I've got an answer for everything. Just ask my wife. Let's keep going here. So that's the trend. Now, unfortunately, the the benchmark price does not go back as far as the 1980s, but the statistics package for residential average detached within the Fraser Valley does. Now, this is really, really hard to tell these numbers, and they have to be guesstimated. I couldn't find anywhere from the board where they actually had printouts from 1979 or 80 or 81. But I did go back and I did find an old statistics package from right around when I got into the business, just after, in 2010. And this illustrates 1979, 1980 really, really quickly. Now, the interesting part about this is the inflation and everything that was going on. Again, this is all not from firsthand experience, because I was knee-high to a grasshopper at that time. I'm going to suggest that the inflation that was going on at that time, with rapid price increases and interest rates then increasing as well, could mirror now. It very well could mirror now. I'm not saying it is. I'm just saying there is that possibility, specifically if something like, I don't know, World War III breaks out, or the market just cools down after COVID and interest rates come back. All right. So let's take a look at this little chunk right here. I'm going to see if I can get focused in on this a little bit for you guys. So this is the $100,000 line here, and 1979, 1980, 1981. All right. So we are going to suggest here that the run up, I'm going to say roughly, it peaked out right at the beginning of 1981, just over, let's call it $125,000. I apologize for not having exact numbers. Then the run down, the bottom was right around that, let's say, $75,000 mark for a detached home in Surrey at that time. And it took about 1.5 years to get there. So let's go back 1.5 years now, and it's probably not 1.5 years, it's probably closer to 1 year, where you're seeing that same kind of price point. But again, we're on a fairly consistent peak. This peak is a little bit skewed to one side, but it's not totally skewed. This is the worst. I don't think I'm helping doing hand signals here. Anyway, I think if you ran a line down here from the peak on this mountain, let's call it, that this valley resembles this valley, and they're not offset by a ton. Now, if you did, for instance, take a look here at how long it took to recover from peak to peak. So let's say if you bought in January 81, how long it did take you 8 years, 9 years to recover into 1989. So there is a chance that the future of real estate here, if interest rates do continue to creep up, and we've had such a run similar to the inflationary runs that we had in the 70s, that you could be negative in your property, maybe over the next 3, 4, 5, 6, 7 years. It is a possibility. I don't think it's likely, but it is a possibility. That's why I tell people never, ever, ever buy on a 2-year plan. Never buy on a 3-year plan. 4-year plan might work. 5-year plan is safe. 10-year plan, you're doubling your money. Because if you go here and you look at 1981, even if you bought at the peak and then you sold in 1991 or 92, you basically doubled your money. Not quite, but basically. Let's look at this little surge here in 1990. Same sort of thing. This is not really offset by a ton, so it's not really that big of a deal. I wonder if is this map going to show me any more, or sorry, this chart. This is the 2008 chart. Same sort of thing. Now there was a little bit of a dip in 2005, but yeah, I mean it's proving my theory right within a few months, one way or the other. So I know all the comments are probably going to say, oh, that was 18 months and that one was only 10 months. I'm telling you, it's not going to draw out over a long period to see the decline. Now, if prices do decline or if prices rise, they may do that over a longer, they may continue at that new price for a long period of time. But I think the correction will happen at the same rate. And in the early part of this year, we saw the shoot up of, 10+%, I think, in condos in Surrey over 2 months. So that 10% can come off very quickly over 2 months. It is possible. So anyway, that is a theory of how fast I think the market will drop. If the market still runs for another 6 months and then drops 20%, I think it will take 8 months to get to that spot. Are you kind of grabbing what I'm saying? So that is good consideration for you if you are looking to make a purchase. Please don't make a short-term purchase. This is the fact of why I don't like pre-sales and trying to flip a property. And always remember that if you need help planning getting in or out of my market, that you can book a call with me right now down below in the description so we can help you get on to the next step in your life. If you're a real estate agent watching this video and you're interested in leveling up your video game to get even more clients, you can buy the real estate video course or my course down below in the comments using the discount code STEVE10 to receive 10% off at checkout. If you'd like to stay up to date on my listings and other happenings, please make sure to follow me on Instagram. Of course, as always, like, subscribe, check out another video before you go. I appreciate your viewership, and we'll see you in a couple of days.